So hi guys, so welcome back to my YouTube channel. It's nice to see you here again. So today I want us to talk about the types of trading. So we have two major types of trading. So the first one is the mechanical way of trading, and we also have the discretionary way of trading. So I want us to do a review of this and maybe research and see which one is way more better for a person who is starting to learn how to trade, and look at the advantages, and also look into which type of trading can give you consistent results, and maybe try to look into other factors. So yeah, let's start. So guys, so as you can see on my screen, so I'm on ChatGPT, and we are now looking for a description for mechanical trading. But before maybe we look into this, so mechanical trading for me is a strategy that is based on rules. Let's say, like, you are supposed to trade it on New York session, you have a predefined stop loss, predefined conditions, like everything is very clear. And then for discretionary trading, this is a strategy where it has rules, yes, but sometimes you have to think and question your own thinking. You see that? An example of discretionary type of trading is like SNC, you see, for double tops, or even the patterns. So 4 months ago, I was trading double tops. I also traded SNC and even CRT. Like, sometimes you have that setup, but now you need to think if you should really take the setup or not take the setup. So let's see what they have to say for mechanical trading. So mechanical trading is a type of approach where every decision is based on predefined rules. You follow the rules exactly as they are, with no or little personal judgment involved. So see here, so your personal judgment is not involved. You are following a system. Like, everything is clear. See? So these are the characteristics of this type of trading: clear entry rules, clear stop loss rules, clear take profit rules, consistent risk management, easy to backtest and journal, less emotional decision making. So yeah, these are the main characteristics. So let's go to discretionary type of trading. So this discretionary type of trading is a style of trading where the trader makes decision based on their own analysis, experience, and judgment, rather than following a strict set of rules. Like, I've told you guys, I used to have such a system where I traded SMC, and then I also did double tops. So for SMC traders, you have to wait for break of structure and then wait for a retracement. Then you have to mark out your POI, your liquidity, and also you need to have an FPG in between. So sometimes you get that setup, but maybe you are missing one confluence, and then sometimes you take the trade and it doesn't work out. Sometimes you take the trade and it works out. Like, you really have to deal with a lot of decision making. Also, you can find multiple trades, so you can easily find yourself over trading, and this can even mess your trading psychology. So let's look into this discretionary type of trading. So ChatGPT says these are the main characteristics. So it's a flexible system, can adapt to changing market conditions, uses market context and experience, doesn't require every trade to look exactly the same. So I'm not saying that discretionary trading is bad, but for somebody who is starting out, it's better to have a mechanical system. So we can maybe try to look at the disadvantages of this discretionary type of trading. So it has more emotional pressure, harder to backtest, and it can lead to inconsistent execution, and beginners can often struggle with over trading. So yeah, I also had all these challenges when I was trading this type of system. So yeah, so that's it for mechanical versus discretionary type of trading. So let me show you now. Let me show you my system, and how I did manage to research and come up with a system. So I want us to talk about how to build a mechanical strategy. So first of all, you find a clear set of rules. Let's say like you want to trade during the New York market open. So you can either pick GBPUSD or maybe USDJPY or Nasdaq or gold. And then you can maybe try, not try, okay, let me give you an example of such a strategy. So there is one, like you wait for the you wait for the market to open at exactly New York time. Currently in Kenya, it's around 4:30 p.m. So and then you wait for the first 15 minutes candle to form, and then now switch to 5 minutes. So wait for either the market to break the high or the low of that 15 minutes candle. If maybe, for instance, if you break above, you buy and target 162, and if you break below that 15 minutes candle, you sell and target 162. So that is an example of a mechanical strategy. So it's easier. You can use so many criteria to build such a strategy. So that's a good example. So after that, now you have to collect data. You see, you have to back up your system and see if it works. So you can go 12 months ago and see each and every month how it performed. For example, I have a mechanical strategy that I started backtesting it on like 6 months ago. So see how January performed, also how Feb was, how March, April, May, you collect data and see the P&L of each and every month, and then you see if that P&L can help you maybe pass a program and such things. You also need to look into many factors. Is the system profitable, and which market does it really do good? You see, so those are now the things to look into. So for instance, I did the research on USDJPY using a mechanical trading strategy, and then I noticed that uh, a 1:1 was more profitable than 1:2. So the profitability factor there is more into the 1:1 model. So I had to pick the 1:1 model. And then there are also other factors like when you are executing that particular strategy, what are the commissions that the broker is charging you? So yeah, I want to attach a screenshot here on the screen and show you after finding now that 1:1 is the CPY model, how the commissions were just crazy. So you can see here on the screen, I did take this first trade on my 5K account. I was risking 50 USD per trade, but now you see the commission is way too much. It's around 10 to 12 USD per trade. So if you do the math well, so I was not trading on Friday because I noticed that most of the Fridays are losing days for this USDCPY -1 model. So after seeing that crazy commission, then I asked myself, will I be having results at the end of the month if I continue using this model? Imagine every single day you are being charged 10 USD for commission. So if you do, because I don't trade on Friday, if you do from Monday to Thursday, that is 40 USD. That is almost 1% on a 5K account. So if you do for 4 weeks, so you will have lost 4%. Remember, this strategy does not have a high P&L monthly, because for instance on January we made 0%, on February we made around 6%, on March we made around 2%, on April we made 6%. You see, we don't have that much figure in the P&L. So I had to drop this model and look for another model. So in this time I decided to go for a high value market like gold or Nasdaq, because now you see the kind of lot I was using on USDJPY. There's a time even I took a 2.07 lot. You can see here on the screenshot. So anytime a 2.07 lot is too big, because for prop firm they charge around $5 to $6 per lot. So if you take that trade with such a lot, that means you'll be losing each and every day. Either you win or lose 10 USD for commissions. So yeah, so it's just crazy. So you can see on the screen, so this Nasdaq. So I managed to build a mechanical strategy for Nasdaq. I love trading Nasdaq. I think we understand each other better. So yeah, so I did correct data for this Nasdaq even from 6 months ago, like to see how it really performed. We need to collect data and see if your system really works. Uh, so let me take you through the trades that I took last week. So let's see. So so let's start on Monday. On the let's pick. Uh, so let's start from a week ago. So you can see on the 15th of June on Monday, we took a loss. You can see. So on the 16th of Tuesday, it was a win, and then on Wednesday, it was also a win again. So on Thursday, it was a loser, and on Friday, the trade is still running. You can see I left it to run over the weekend. So yeah, so you can see the system performs really well. So let me show you the P&L from January. So this is Nasdaq 26 January. So you can see the month here, and then this other row is for the P&L. So for January, we made 10%. February, we made 17%. And then on March, we made 11%. April, we made 16%. May, it was our worst month so far, we made 7%. So you can see it's a very good system, because if you are trading this on a prop firm, you could easily pass your phase one or phase two within a month. You see, it's a system, it's very easy to follow. So yeah, this is how you should maybe do your research and find a backed up system that you have backtested and seen that it really works. See, so yeah, that's it for this video. So from next week, which will be starting uh, from the 20th, tomorrow Monday will be on the 22nd of June. So I'll be recording my strategy each and every day, and I will trade together and see how this system performs. So we record each and every PNL for every week, and then we do a monthly PNL and see how the system performs. So that's it for this video, and thank you for watching. Yeah, bye for now.